Are we back to twin deficits? Bring up the chart. The chart's simple: deficit to GDP. We'll run this out at some point on Twitter. Good Morning Radio London. Deficits to GDP. Douglas Holtz-Eakin says we get back to 5, even 6% of deficit to GDP. Do you care?
Yeah, I think it is concerning, given that our economy is running as well as it can be. Normally, you would like to see certainly a much smaller deficit when we're running at a sub 5% unemployment rate. We're running at a 3+% GDP.
Jack, isn't the heart of the matter that our debt to GDP is double, as a conversation point, double what it was under President Reagan?
Yeah,
we're starting at an ugly point.
It is. And the fact is, I think that one of the concerns I have is that policymakers seem somewhat inured by the use of debt. I think that as long as investors and as long as voters aren't concerned about it, fact is, lawmakers are near-term thinkers. Congress thinks in 2-year cycles, the Senate thinks in 6-year cycles, and as long as it's not a problem on their watch, they're going to keep at it.
Right, but so Jack, talking about the psychology, what happens? The markets freak out or are concerned about it, and then it has ripple effects?
Yeah, I mean, I think that ultimately it's going to be the bond investors, but you have to keep in mind, even though the Federal Reserve is pretty much ended its quantitative easing program in 2014, more than $2 trillion of printed money found its way into the financial markets over the last 12 months. Some of it from reinvestments at the Fed, but mostly, of course, European Central Bank and Bank of Japan. So even if the bond market vigilantes decided to get up off their couch and stomp their feet, there isn't much they can do with that kind of buying going on in the background.